All right, so when you hear the words diversity, inclusion, and social justice, how does that make you feel? Diversity, inclusion, social justice. Like, what kind of connotations does that give you, good or bad? Because depending on how that makes you feel, you may or may not like where this story's going. So here we go. So in this year during COVID and the pandemic and social justice, a lot of industries have been affected, and an industry that is definitely not immune to this is Wall Street. Now here is the story. The NASDAQ is now proposing a rule that would require listed companies to have at least 2 diverse board of directors. Let me say that again. The NASDAQ is now mandating all their listed companies to have 2 diverse board of directors per company. That's 1 woman and 1 minority per company. So my question is this: is this a good idea? That's number 1. And number 2, what percentage of companies that are on the NASDAQ would actually pass this test? This is coming up on Sales Talks Money. Let's talk money.
All we talk is money. All we talk is money. All we talk is money. All we talk is money.
All right, so the NASDAQ has gone woke. Now, what I'm gonna do right now is I'm gonna break down the entire facts of the story, straight up facts, homie. And then I'm gonna give you some certain opinions, how people feel about the situation at hand. I'm also going to give you both sides of the story, and then I'm going to give you my take at the end. I'm going to let you know how I feel about this story. So if you want to come in here, you'll see what's going on here. So this is the story on CNN Business. NASDAQ to corporate America: make your boards more diverse or get out. That's the story. All right, so here's some of the details. As we discussed earlier, NASDAQ is now imposing the rule that at least 2 diverse directors. Now, what does that mean? 1 woman, that's 1 of the 2, and 1 from an underrepresented minority group, i.e. Black, Latino, Asian, or LGBTQ community. All right, so the NASDAQ is basically saying, move over, white men, we've got to get more diverse in the NASDAQ. So the question that I asked you initially is, do you think that is a good idea? All right, so my next question was, what percentage of companies would actually pass this test? Do you have a guess? 75% of companies on the NASDAQ would fail. All right, so here's the numbers. 3,300 companies on the NASDAQ, 2,475 of the companies would fail, 825 would pass. So 25% of the 3,300 companies would not pass this basic requirement of one woman and 1 minority. All right, so that is the situation at hand. I'm painting you the picture, a little overview right here. Now we're going to get into some of the pros and the cons, the ups and downs of what this entire situation is handling. What are the rules and regulations that the NASDAQ is putting into place? So this is a NASDAQ that is recommending this. There's like self-imposed regulation. Here are the rules. Companies are required to disclose consistent, transparent diversity statistics about their boards in what is called a board diversity matrix. That's all in this article right here on CNN. You can check it out. We'll put a link to you over here. It's all up and down this article. The NASDAQ to corporate America: make your boards diverse or get out. So basically, that's the first thing. The situation, the rules would go into effect within 2 to 4 years, depending on the size of the company. So if you're a smaller company, it could take you 2 years, 4 years for larger companies. All right, so that's that. If a company does not meet this standard, what's going to happen? Well, they will have to explain why publicly, almost like a public shaming, if you will. We all saw that on Game of Thrones. Shame, shame, shame. Now, what is the penalty if you do not explain yourself publicly? Well, you would potentially be delisted. You would be delisted from the exchange for non-compliance. Now, you might say, all right, delisted. Like, how the hell do you get delisted? Well, traditionally, here's how you get delisted. 2 major reasons: fraud or bankruptcy. So now there's going to be 3 reasons how you potentially get delisted: fraud, bankruptcy, or a lack of diversity. Very interesting. Now, why is the NASDAQ doing this? Let's find some. I'll find you another article here, right here. All right. There's a proposal is basically based on 24 studies that found an association between diverse boards and better financial performance and corporate governance. I'll say that one more time for you guys listening at home. This proposal is all based on 24 studies, that's 24, or a baker's dozen, 25, found an association between diverse boards and better financial performance and corporate governance. All right, so now all this stuff, I just painted you an overview of this entire thing. Now, what's the next step? Well, it needs to be approved by the SEC. So the Securities Exchange Commission is going to be the governing body that says, yes, we like this, or no, we don't. Yes, you can do this. No, you can't. Now they've been reached for comment. They have not commented on this exactly, but what they have given is a general commentary. The SEC chairman, Jay Clayton. Jay Clayton says, we welcome dialogue on how to improve diversity, inclusion, and opportunity in the financial services sector and our economy more broadly. Something tells me they're going to go along with this idea. That's the SEC. Now you might say, this is a crazy idea, bro. What are you talking about? This is a great idea. I like this. What are some case examples of other stories that of other situations that might have already implemented these rules? Well, number one, first and foremost, 5 of the largest companies on the NASDAQ are actually already in compliance. Who are these companies? We're talking Apple, Microsoft, Amazon, Google, and Facebook, all in compliance, and then some. California Governor, I know you're not going to be surprised by this one, California Governor GAVIN NEWSOM signed a law, this was back in September, that would require at least one minority member on boards of all publicly traded companies that's based in California. Goldman Sachs, massive financial firm, we all know Goldman Sachs, announced it will not take a company public without at least one diverse board member, so they're on board. And BlackRock, who is the world's largest money manager, what did they have to say? Well, they said they just want more diversity. All right, so that's that. Now, what's the NASDAQ's reasoning throughout this? Let's take a picture I'll show you a picture. This is, her name is Adena Friedman. She's the first woman to lead a major U.S. exchange. She is the CEO of the NASDAQ. Now, what does Adena have to say? Let's scroll down right here. She says, we believe this listing rule is one step in a broader journey to achieve inclusive representation across corporate America. And she says, now, listen, we're not saying that 2 is an optimal composition of the board, but it's a minimum level of diversity we think every board should have. That's according to Business Insider. That's an article right there. Now, Nelson Griggs, we'll throw up a picture of Nelson. He's the president of the NASDAQ Stock Exchange. He says corporate diversity at all levels opens up a clear path to innovation and growth. Now, here's what the NASDAQ believes. I went through all these articles and I scrolled through all this, and here's essentially what they believe. Number one, 3 major points of what the NASDAQ believes, and then I'm going to give you actually some people that are not exactly fans of this. So here's what the NASDAQ believes. Number one, varying opinions and voices, which is known as groupthink, would enable companies to better understand employee and customer bases. All right, so that's number one. Number 2, it would reduce fraud and insider trading, right? So nobody wants that. And then number 3, it would improve financial performance and stock prices. Pay attention to number 3. It would improve financial performance and stock prices. And here's the kicker. Here's the kicker. The NASDAQ cited a report from Carlyle Group that found companies with at least 2 diverse board members, here it is, have 12% more earnings growth per year than companies that lack diversity. I'll give that to you one more time. This report from Carlyle Group found that companies with at least 2 diverse board members have 12% more earnings growth per year than companies that lack diversity. So that's why the NASDAQ is like, let's go with this diversity. They're all about the money. When in doubt, follow the money. Now, who's against this? Who's against this? Not everybody's loving this idea. I know people at home are saying, I do not like the sound of this. Let's check out this article by the Washington Post. Washington Post says, why NASDAQ's latest diversity plan is hypocritical. Sorry about that. Hypocritical. Let me give you some of the words throughout this article. I know it's hard to kind of see all the words here. Here's some of the words that the New York Post, conservative, a little more right-leaning publication has to say. They called it ludicrous, preposterous, absurd, hypocritical wokeism at its worst, and heavy-handed virtue signaling. They asked the question, do they want this lady right here, Adena Friedman, who is the CEO of the NASDAQ, they asked the question, should she want to be known for getting her job because of her gender or because of her skills? That's what the New York Post had to say. Now, who else is basically asking these questions? The conservative group Judicial Watch, the president, Tom Fitton, says, what does Tom have to say? It is disturbing and may violate the law for NASDAQ to seemingly require a discriminatory quote system for race and gender. And then you got Mark Denzler. He's the CEO of Illinois Manufacturers Association. He is worried, this is what he's worried about, that they may have to kick someone off the board who is not a woman or African American just to comply, and that would invite a separate claim of discrimination. So he's going the old reverse discrimination card. So that's both sides of the coin, proverbially. That's the good, the bad, and the ugly of what's going on here. Now, what is my take on all this? Now, here's my take. I think we can all agree, whether you agree with any of these articles, I think we can all agree that diversity is a good thing. I think we can all agree that whether it's corporations, boardrooms, even public officials, they should all reflect basically what America looks like. So I'm good with that. But where do you draw the line? That is the big question here. Where do you draw the line on all this kind of stuff? So here are my questions to you, the audience. Thank you for tuning in to Valuetainment Economics. Here are my 3 questions to you that I'm posing. Number 1, shouldn't the most important factors be merit, skill, talent, hard work, effort, competence, and qualifications? Shouldn't that be the most important factors first and foremost? Number 2, shouldn't the best possible candidate get the job regardless of gender, ethnicity, race, or sexual orientation? That's number 2. That's my question to you. And then number 3, how do you track diversity? That's the big question here. How do you track diversity? Now listen, gender is pretty easy to track. You know, I get it. Some people are a little fluid these days, but gender is pretty much easier to track. But race, ethnicity, and sexual orientation, that's a slippery slope, my friends. So I get that people self-identify, like I mentioned, certain minorities, certain LGBTs, but here's, I guess, my question to the NASDAQ. In your effort for diversity and inclusion, which I respect you on that, aren't you making it more about the issues that you're intending to fix? So that's what's going on here. That's my entire situation here. And then I thought at the end of the day, like I said before, we're talking about Wall Street here. We're talking about Wall Street here. And the number 1 rule in any investigation is what? Follow the money. So since we're talking about Wall Street and since we're following the money and the numbers don't lie, let's go back to that thing that I brought up earlier, which was the number 1 point. The NASDAQ cited a report from Carlyle Group that found companies with at least 2 diverse board members have 12% more earnings growth per year than companies that lack diversity. So it's all about the money. This isn't some sort of virtue signaling. We want to do well. They're basically saying, listen, we've done the math. We've run the numbers. The more diverse you are, the more different of opinions you have, the better your company will be. Assuming that obviously everybody that has the job is competent, works hard, has the skills, and has the merits. That's that. So listen, wrapping this up. Goldman Sachs, we talked about them. Their CEO, David Solomon, said this: we might miss some business, but in the long run, this is the best advice for companies that want to drive premium returns for their shareholders. That's what this is all about. Premium returns for their shareholders. So here's the bottom line. Whether you like it or not, diversity and inclusion is coming to Wall Street. This is just evidence with the NASDAQ. We can see that here. So here's the question. Who is going to be next? I'm looking right at you, NYSE, New York Stock Exchange. If it's happening to the NASDAQ, you know the NYSE will likely be next. That's this episode. I would love for you to comment and like and basically give me your opinion on this episode, whether you agree with me, whether you don't agree with me, whether you agree with the NASDAQ. I want to hear what you have to say. And if you have not seen my episode on Janet Yellen being named the Secretary of the Treasury, the first female to be named Secretary of the Treasury, check that out right here. And if you have not subscribed to Valuetainment Economics, please do so below. Around here, all we talk is money. And as always, save that money.
All we talk is money. All we talk is money. All we talk is money.